In our next lesson, we're going to talk about some news events that can affect the overall market and individual stocks. We're going to start out by talking about the Federal Reserve, or the Fed. What is the Fed and what do they do? First of all, the Fed meets 8 times a year, and what the Fed is responsible for is the course of interest rates. They decide whether to lower interest rates or raise interest rates. As far as we're concerned, and trading, all of these events that we're going to talk about, we are not going to have positions going into these events. If we do, we are purely gambling. Generally speaking, for the consumer, when the Fed is raising interest rates, it's a negative. That means our mortgage rates go up, and it means it costs us more to borrow money. This is announced at 2 o'clock on the Wednesday after their meeting starts. So Fed, they decide the course of interest rates, do not have positions going into the Federal Reserve when they make this announcement. Next, we're going to talk about the unemployment report, and there's 2 components to it. The actual percentage of people who are unemployed and the amount of people who went back into the workforce for that month. So it's going to come out as a percentage, 4.5%, 5%, 6%, and the actual number is what they call the non-farm payrolls. And that's going to be, could be 100,000, 200,000, or 300,000. That's how many people actually went back to work during that month. Again, the most important thing about the unemployment number is when it's announced at 8:30 on Friday morning, do not have any positions going into this event. Next thing we want to talk about is the GDP, or Gross Domestic Product. This is announced once a quarter, and what that measures is the economic growth in our overall economy. And that's also going to come out as a percentage, 1%, 1.2%. Very important thing about the GDP is most people don't know, they've heard the word recession, but they don't know what it is. If our GDP is negative for 3 months, the economy is said to be in a recession. Again, as a trader, not that important, but good overall knowledge to know. Those are the 3 big economic numbers that can really affect the direction of the overall market. Again, very, very important. When these things are announced, we do not have positions. It's almost like trying to have a position before earnings come out in a stock. We don't want to guess which direction it's going to go in. Once these things are announced, we'll go to our charts and look for one of our 6 trading setups. So do not gamble. We do not do that in any way, shape, or form. Let's talk about a couple of things that can affect an individual stock now. Some of them are very important and some of them aren't as important. Let's talk about the one that's the most important first. If you're trading during the day and you hear that Apple CFO, or Chief Financial Officer, has just retired or left the company, this is the one time I want us to act and put on a trade. Anytime you hear the word CFO, Chief Financial Officer, who's in control of all the money, that is not good news, no matter what happens after that. So when we hear a CFO has been kicked out or resigned, I want you to push the short button in that stock and get short the stock. It is never good news. Generally speaking, 99 out of 100 times, it's the old saying on Wall Street, where there's smoke, there's fire. So that's the only instance in everything that we're talking about where we're going to put on a trade. Next thing that can affect a company's stock is if the CEO resigns. This could be good or bad, depending on whether the CEO is a good CEO or a bad CEO. A couple of years back, when they announced that Tim Cook was taking over at Apple from Steve Jobs, who got sick, that day that it was announced, Apple went down 26 points within the first half hour of it being announced. Ended up being a phenomenal buying opportunity over the course of time. And again, when these things happen, anytime a stock really gets moving, we're going to wait for one of our trading setups. Maybe we'll get a trend trade, maybe we'll get our far from moving average trade. But again, no positions going into any of these events. We wait and we react. One very important thing I want to talk about is biotech stocks. And these things can be absolutely bizarre. There are times you might be sitting and you'll see a little stock that's trading at $1 or $2, and it's a little biotech company. All of a sudden, you'll see an announcement that they got an FDA approval for one of their drugs. The most important thing with this is never get on the wrong side of one of these stocks. If they announce this and you see a stock go from $1 to $2 to $3 to $4, we've seen these things sometimes in these stocks. A stock is $1, and 20 minutes later, it's trading at $30. The most important thing is this: never short those stocks as they're going up. That's a recipe for disaster. I've seen people wipe out their entire accounts because they think one of these little biotechs has gone too far too fast. When these things are announced, if we can get on the same side of them and buy them, that's the position that you want to be in. Otherwise, we just wait. Most times when this happens, we'll get one of our far from moving average trades to set up and be able to take advantage of that. So always be on the same side of a big biotech move. Company takeover. 99% of the time when a stock is taken over, it's going to be announced at the end of the day or before the market opens. These companies are smart enough not to announce something like that in the middle of the day. And if that happens by some mistake or reason it leaks out, they're going to stop trading in that stock. And we're really not going to have time to react to that. Most important thing with any of these news events is do not have a position going into them. That is gambling, and we do not gamble in any way, shape, or form. Let's move on to the next lesson.